Hi everybody, my name is Jenny and I am a therapist in private practice. I'm also an approved clinical supervisor and I have a company called Whole Human Financial that is made to support other therapists in private practice, especially with the financial side of things. So we support with bookkeeping, taxes, and then also just financial coaching, helping folks to plan and think about all things financial. So with this series of videos that I'm about to do, we're going to look at bookkeeping, and I'm going to start here with more of the basics. Then we'll look at specifically some things to consider depending on what type of business that you have, sole proprietor versus S-Corp, and I'll explain a little bit more about what the differences are between those two. I'll go through some different reports that I can create for you that may be helpful. And we'll also look at the personal finance side of things, budgeting, and just kind of figuring out how you can put the whole thing together. So let's go ahead and get started with what are we talking about? When I'm talking about bookkeeping, what do I mean by that? So for me, bookkeeping is a way to take all of the different transactions, all the comings and goings that you have for your business, and put it all in one place where you can record. Maybe you have a business bank account and you also have a business credit card account, and you've got different transactions that you can see with each of those different accounts. But with your bookkeeping, that's going to be a place where you take all that information from the different accounts, put it into one place where you can look at it all together, and you also can organize it. So we can give different transactions different labels or put them into different categories, and then we can use those different labels and categories to really organize your information and be able to look at it in different ways that will help you as a business owner to be able to really see patterns and answer some questions that help you with planning and figuring out different things. So just to give kind of a small example to start with, and then I'll go in and actually show you examples of reports and things so you can see more what I'm talking about. But let's say that you are trying to figure out marketing and maybe where to focus your attention in terms of clients that you want to attract. So maybe you get a report because you've organized your data to where you can see which insurance companies are paying you out more money. Or maybe you can look at what zip codes are you tending to attract right now the most clients from. That kind of information can then help you to figure out how you might want to focus in terms of marketing. So that's just one example. And then another thing that I'm thinking about when I think about bookkeeping is really compliance. As small business owners, we are responsible and have certain expectations put on us to comply with different rules, regulations, and laws. And one really important way that we maybe can see this in action is with taxes. And of course, there's some unique ways that taxes play out for us as business owners that are different from just being a regular person that's not also looking at things from the small business lens. And so bookkeeping can be helpful when it comes to things like taxes by allowing us to categorize, for example, our expenses in ways that make it a lot easier when it comes time to do taxes, either for you if you're doing those taxes yourself, or for whoever is doing your taxes, to kind of be able to see at a glance how much you spent in different categories that then directly translate to the tax forms. And I'll show you a little bit what I mean by that as well in just a minute. So, one thing to think about is there's all kinds of businesses out there, and some of them, many of them, have a lot going on that we as therapists in private practice aren't really worrying about. So for us, our business model tends to be pretty simple, and we don't have things like inventory, for example. So if you were to look at something like a restaurant, a very different kind of business from us as therapists in private practice. A restaurant is going to have all kinds of inventory, food, and other items that are going into what they're actually producing and selling for their business. We don't have items that we tend to sell. We're selling more of a service, and so we don't have inventory. For those businesses that do have inventory, then there's these other things that have to get calculated, like something called cost of goods sold. We don't need to worry about that usually. And then something like a restaurant probably is going to have assets, things like industrial kitchen equipment, and with big assets like that comes other calculations that need to be done in the form of depreciation. If you've ever owned a rental unit, you may have had to calculate depreciation for that rental. So same thing goes for other kinds of business assets. And that can get kind of complicated, figuring out depreciation. There's different ways to do it and calculations, and all of that tends to be stuff that we, in a basic private practice kind of setting, we don't need to worry about. We don't really have generally a lot of assets. We don't have company cars or other things. And so we may have some furniture, but that can be kind of taken care of all in 1 year to where we don't have to do this long-term depreciation of assets necessarily. And of course, it depends on your situation. Another thing that other businesses might have more of than we do, although some of us may have some of this going on as well, is employees or independent contractors that need to get paid and taken care of. So if we have employees, then we need to figure out payroll, and that's an extra complication. And if we have contractors, including people that maybe we are consulting with, if we pay people $600 or more in a year, and then we technically should be issuing them a 1099. We should be asking them to fill out a W-9 form, which is a tax form, and then filing a 1099 for them. And there's a process to do that where we need to file with the IRS as well as give the independent contractor a 1099 that they get to use when they are doing their own taxes. And many of us as private practitioners and therapists get 1099s from places like Headway or Alma or, pick your place like that. If we're working with folks where we are the independent contractor, then we had to fill out a W-9 and we get a 1099 that we then incorporate into our taxes. So the point of talking about all of this is to say, for many of us, there are bookkeeping systems out there that allow very fancy things to happen, something called accrual accounting, for example, which is a little more complicated than cash-based accounting, and all of those other things, depreciation, payroll, figuring out costs of goods sold, and all of that are things that something like QuickBooks can do for us. And if we have a more simple situation where we're not needing all of those bells and whistles, then we may not need to be paying the monthly cost for QuickBooks. Another thing about these kind of systems like QuickBooks, which I've been certified to work with and I've gotten special training on, so I know what it looks like. It's great. There's also a lot of things about QuickBooks that are pre-programmed and baked into it that we don't really have control over. It's just kind of already set up that way for us. Where I'm going to show you another option, and this is something that I created just through Google Sheets. So very cost effective, and I think it's kind of nice because you have total control, really, over what you want it to look like, and basically the formulas and everything that you might want to have programmed into it, you can actually see what those are, you can change them, or just have more of a base understanding of what's going into it. So I'll show you that in a minute, but I also wanted to share a little bit about just kind of any kind of getting started with bookkeeping. What are the steps, the main steps? And this would apply for QuickBooks or something like that, as well as my Google Sheets option that I'm going to show you. So the first thing that I would recommend that you do is create something called a chart of accounts. Just to give you an idea of what kind of things would go into a chart of accounts, there's all of those bank accounts, and I'm talking just about the business side of things here. So you're probably also going to have accounts for your personal finances, and we're not going to worry about that right now. And of course, we want to make sure that we are separating out all of the business stuff from the personal stuff. So hopefully you have maybe a bank account, maybe you've got a checking and a savings account through a particular bank just for your business, separate from the personal. You may also have a business credit card. You may use a business Venmo account or Square or Ivy Pay, or all kinds of different things that could go into this. So it's helpful to actually just list out all of those different accounts and have kind of what they're calling a chart of accounts. QuickBooks does this for you, or you can just do it for yourself. And basically, having a chart of accounts as a first step is helpful because it gives the lay of the land. Where might we be needing to look for transactions to be coming in and out? Where are you getting income of getting paid for services that you're providing? If you use something like Headway, for example, what is the account or accounts that are tied to that? So when Headway pays you, where does that money go? Where can we find those transactions? And then on the other side, all those expenses that you are paying for your business, how do you do that? Where is that money coming out of? What are those accounts? And when we have all of those in a list as a chart of accounts, that just makes it easy for us to know all the different places that we may be wanting to check for transactions to gather and put into our one accounting book. So that can be the first step. Another point that I'll just make as far as kind of gathering all these transactions from all these different accounts, you're also going to want to know all of those different accounts, so that I would recommend on a monthly basis that you do reconciliation. If you have somebody doing bookkeeping for you, this should be a part of the services that they provide. And so something that we call source documents, we want to go straight back to the source. For example, to your bank account, and we want to look in your checking account and be able to actually see for the whole month from whenever the last time that we reconciled things to now. We want to be able to see, okay, what are all the transactions that the bank has listed for you, and then how does that coincide and match with everything that we put in your accounting book, your record that you're keeping. And we are wanting to kind of see, okay, is it the same amount for these different things? Is there anything missing? Is there anything duplicated? And of course, there's going to be times where it's not going to match up perfectly. Maybe you just got a check from a client and you deposited it, but it hasn't cleared yet. So you may have put it into your record as, okay, I got paid, here's this money that's now added to my account. But as far as the bank record is concerned, it hasn't cleared, so it's not showing up yet, and that's fine. This is just to say some of the ways that you're going to use that chart of accounts. And then the second step is going to be what is called a general ledger. And I will go through lots more details on this spreadsheet, but just for you to be able to kind of get a flavor for it, here's your general ledger. In QuickBooks, it'll do this for you. It's a little bit tricky to find it, but basically, this is where all of your transactions are going to be in one spot. So this Google Sheet that I created, this is how it looks, and you can just kind of see all the ins and outs, the dates, the business name. Here you can see the categories, and then of course the amount, and then I have a kind of running total that I call the balance that you can just kind of see there. You want to have some place where all of your transactions go, and this might be something that you just keep for 1 year, and then year to year maybe you start over again, but technically you would be able to go back and look at any transaction for all the time that you've been keeping a record of your business accounts. And this is good because you never know when you might need to go back and find something. So it's good to have a place where it's all in one place and you can find it. And then the third step for it's kind of just getting started, and I showed it to you just a tiny bit a minute ago, is to figure out how you're going to categorize, especially expenses. Maybe for your deposits, it's all just going to go into deposits. And maybe you have some ways that you actually want to organize those deposits as well. I'll show you some ideas for that in a little bit. Here I'm showing you something called the Tax Guide for Small Businesses. And you can see what this looks like for yourself. You can go and Google it, get it from the IRS website. I have taken a version of this and just circled a couple of chapters that I would recommend in particular going to. So chapter 8 goes through business expenses. You may want to know more about how to expense the use of a home office, so that is listed here. And other than that, I would mostly recommend just going to, it looks like starting at the bottom of page 40, other expenses that you can deduct. And here is where you're going to have things like advertising, bank fees, education expenses, utilities. List here coincides with the categories that I have in my sheet. So you can see those listed here. And that's where they come from, and that's why. It also may be helpful just to look at the expenses that you cannot deduct. So just to be kind of clear on where that line is, if you give charitable contributions from your business or political contributions, you cannot deduct those for taxes. If you're having to pay penalties and fines to a governmental agency, taxes themselves are not tax deductible. Is, starting on page 42, the self-employment tax. This just more explains directly from the IRS, what is the self-employment tax? What are we talking about when we're talking about that? So hopefully you are already aware that as a person who is self-employed, you are likely going to need to pay quarterly estimated taxes. And part of the reason that we have to do this, and this is if you're earning $1,000 for the year or more, which applies to many of us. So the IRS wants to be paid a little at a time throughout the year, doesn't want to wait until only one point in the year. And if you do wait, even if you don't end up having to owe taxes, they still may make you pay some penalties for not doing estimated tax payments throughout the year. And so, what are these taxes? Of course, as individuals, we have to pay taxes on income that we earn, and even some of the income that is gotten in other ways and not necessarily earned. There's some money or other kinds of items and goods that are not having to be taxed. Things like gifts, for example, inheritance, but almost everything else we have to pay taxes on. For the self-employment side of things, we need to pay not only those taxes on income or money that we're collecting, but also we have to pay a particular amount for Medicare and Social Security. As employees, we also have to pay this, but we only pay one half of it, and then our employer pays the other half. When we are self-employed, we don't have an employer paying that other half, so we have to do it. So as self-employed folks, we have to pay the whole thing for Medicare and Social Security taxes, in addition to income tax that we also have to pay. And a lot of times it can be a real shock to the system when you're first starting out as a self-employed person and not, it's very different from being an employee where your employer will usually withhold your taxes for you, and so you don't necessarily see and feel on such a regular basis how much you're paying in taxes. And then of course now you're paying more for Medicare and Social Security because of being self-employed. Let's say that you've listed all of your accounts and you've got your chart of accounts. You've also figured out a place where you can put all of your transactions all together in one spot, and you've figured out the categories that you want to use for expenditures that maybe matches what the IRS has, so it's easier to do taxes. And again, this would be something that you're going to do whether you use a system like what I have with Google Sheets, if you use QuickBooks, if you use whatever else. After you have those steps in place, then we can go and dive a little deeper, specifically into the format that I have for bookkeeping, just to give you a sense for one way to do it. And of course, this is not the only way, but it is just a way that I have created, and I wanted to share it with you so you maybe have this as a potential option for yourself. I'm happy to work with folks who, if you have questions on this, or if you want some help in setting up your own tool like what I have here, I can help you to get your own kind of going, but I wanted you to see what's actually in here first. So I showed you the general ledger where all of the transactions are, but there's also tabs just for each month. So they match pretty well what the general ledger has in terms of you've got your date of transactions, the business name, the category, the amount, and then that balance thing again. So this is mock information. It's not real, although I did put some things in here that may look familiar or be similar to what you actually do have in your own private practice. And when you go to the category, the way I have it set up, I've got all the categories here to where you can just kind of point and click what category you want to put a transaction into. If you go over to a little bit to the right, you'll see those same categories listed with just a little bit more detail. So, organizational, for example, this is really referring to anything you need to do for things like your business licenses. So when you need to renew your license, when you need to do different things with your regulatory agencies for your state and whatnot, that's what that's referring to. Professional is going to be more things like memberships, if you're part of a state or national association, for example, that would go into professional. If you're paying for tax services from someone, you can put that into professional. Paying a lawyer to look over your forms, that goes there as well. And then I say training, the IRS calls it educational. I say marketing, the IRS calls it advertising, but that's really what those categories are referring to. And here you can also see when you get to the bottom, just a total. What was the actual total amount that was spent for the month of, in this case, January? It also is going to total for you the deposits. So just for people that maybe are interested, the way that these things get automatically totaled, you can see the formula here. It's a lookup formula that you can do in Excel and Google Sheets. And so it just basically says, okay, anytime that you see the category deposits, go ahead and add whatever's in column D to this cell here. So that's what it's doing, and that's how we get it. And then, of course, the balance is going to be taking the total deposits and the total spending and giving us whatever's left over. So what did we earn minus what did we spend? I also just have here some examples of other categories that maybe you want to keep a little bit separated from the rest of your spending. So if you have something like a solo 401k or a SEP IRA where you are giving yourself some retirement money, then that can go maybe in a separate space, because you do need to keep track of that a little bit separately, and you want to make sure that you keep it within, there's certain rules depending on what kind of retirement account you're using, and that's beyond the scope of today's video, but I have it separated out and listed there in case that's something that you wanted to keep track of. And then also the taxes that you're actually paying. So the estimated taxes, the yearly taxes paid, you can keep that separated out. You cannot deduct that from more taxes that you're going to pay, but it's good to keep track of how much you have already paid in taxes so that you can go ahead and when it does come time to do your taxes, then you can take out whatever you've already paid so you don't have to repay that again. And then I like to kind of look at, okay, what's left over after I look at the regular expenses and then these other expenses. What do I actually have left over after that? And for me, some of you may or may not have this. It's a little bit of an extra, but I rent a space from a commercial agency or group, and then it's a bigger space than I need to myself. It's a suite of offices. So then I have people that I sublet to, and then I get some income from them. And I like to keep that separated. So that kind of income is different from all the rest of the service revenue that I make from providing counseling services. So to show you too, I have a tab here called All Months Data. So here I've got 2 months worth of data, and you don't have to enter anything into this. It automatically calculates and puts everything, populates the information from the other sheets. So all that you need to do is go to whatever sheet, whatever month you're wanting to be looking at, and let's say we are starting with a brand new month. Let's say it is March now. Here we are, it's a brand new month, and we just paid for our simple practice. So we'll say simple practice, and that is going to be professional. That's the category that I listed under, and it costs us $69. So now that's automatically in there. And let's say that then we also have Google Suite is something that we purchase. That's also a professional item, and that costs us $12. So now as we type those things in, it's automatically putting it and calculating for us the balance. It's also automatically putting in the professional category how much we've spent. And if we go to the all months data, it'll also pre-populate that for us. So we don't need to do anything other than just entering one time that transaction information. And then you'll see here, it also gives you kind of the running totals where you can just see everything in one place in terms of, all right, what are we spending for each month? The service revenue, and for me, the rental income separate, and then the net. Right-hand side, you'll be able to see the monthly averages for each of the categories. So be able to see, okay, where am I maybe spending the most money? And I also have percentages here so that it's easier to see that as well. I'm spending almost half of my money on taxes, so that's pretty sad. And of course this is mock data, so don't worry, it might not be that bad. You can see here the total totals here on the right hand side. So my total so far for this year, I have spent almost $6,000. I have earned $11,400, and then what's left over, total for this whole year so far, is that amount. It's a good way to be able to kind of see at a glance, all right, how am I doing with, am I earning more than I'm spending? And then I'll also show you now a couple of reports that may be helpful. So this is a profit and loss or income statement. See that it is going to look similar to what we were just looking at with the all months data. It just organizes it slightly differently. It also allows us to see all of the revenue that I've earned. So it separates it out from services that I'm providing versus the rental income, but then it gives the total. And then we've got all of our expenses. So again, here's those categories, same as what we were looking at before for all the different expenses. And this again is helpful when we go to do taxes. We're going to be basically looking right here, and then we can put that information straight into our Schedule C, or if you are an S Corp, you might have something different. Total expenses here. Then we have the income tax as an extra thing that we're looking at. And then we can see, okay, what is our actual net after we look at everything that we earned, everything we spent, what do we actually have left over? And then there's something here called a profit margin that's actually looking at, okay, here's everything that we actually had as our net, and then divide that by everything that we earned, and that gives us our profit margin. Different industries have different profit margins that might be better or worse. We may want to be going for something around 70% or higher because we don't have inventory, cost of goods sold, and all that. So that may be a number that you want to try to aim for. And if it's lower than that, that can give you some information about, well, are there some things I'm spending money on that maybe I don't need to, so that more of my money that I'm earning, I can actually retain. So that's just one example of how bookkeeping and then the reports that can come out of bookkeeping might be helpful for you. Another report that is very often utilized in business bookkeeping is the balance sheet. This can be especially helpful for those businesses that have all of those extra bells and whistles like assets, right? So there's a basic accounting equation that the balance sheet is based off of, and basically it's looking at assets, which is going to be anything that the company owns, and then liabilities is going to be anything that the company owes to others, and then the equity is going to be what the owner's stake in the business is. And so I'm not going to go into a lot of details about all this. If you want to learn more, feel free to ask me, and I'm happy to explain these in more detail. Here's a report that we might really use more, and this is something that I call the cash flow. So it has transactions in it. It's slightly different from the transactions that are listed either in the month by month or general ledger. The main way that the cash flow is different, in the general ledger, you're going to see things listed here a little bit more individually. So for example, let's say we use the credit card to purchase these office supplies. Well, that's not going to be what's listed in the cash flow. Cash flow is going to be really looking specifically at, in my case, I just have one business checking account and that's it. So it's really focused on that. Let's say that my credit card is American Express. So we're pretending that for December, whatever all the expenses were that I had, it ended up that I paid $100 to the credit card out of the banking account, out of that checking account. And so I'm not listing all of those transactions that I actually had within the credit card. I'm just putting the total amount that I paid out of my bank account. So that's a little bit one thing that is different with the cash flow from what you have in the monthly or general ledger. And I use this to reconcile with my bank account directly, so it matches up. And of course, this is mock data. It's not really what I have in my account, but I wanted for you to just get a sense for what it could look like for you. So I had a couple of banking charges that happened directly through the bank, so you'll see that those match what's also in January here. $27 for new checks and a merchant bank card fee, $25 $29.95. So that's what's listed here. And then I got the rental revenue that came into the bank account. In December, I had expenses that I racked up, and then in the beginning of January, I paid for the December credit card bill, and so that's what that is. Distributions are going to be money that we take from the business account and give to ourselves personally. So that's what that is referring to. And then I have an S Corp, and so I have to separate out the employer and the employee side of me. And so the employee side of me gets a paycheck every month, also has to pay rent, and then there are taxes. And so some of these taxes I wanted to just kind of highlight for anybody that is more of like an S Corp. You're going to have these employer taxes to have to pay. FUTA, that's just an employer tax. Federal taxes that I withheld from the paycheck that I gave myself as an employee. And Colorado, which is the state that I'm in. So there's unemployment insurance that you have to pay, and then there's just the regular payroll taxes for the state. And then for me, Venmo is a separate thing from the credit card. So my transactions coming in and out through Venmo to the bank account, I list separately in this cash flow. And then I had another distribution, and then what I do is I just take everything that was earned for the month, and you can see here I earned $5,400 from providing services, and so I just take that and I put that in as my service revenue. So instead of listing out all the different deposits like it's listed here in the January tab, the cash flow tab consolidates it. That can look different depending on your situation. And then I just want to point out, in February, at the beginning of February, we've got this credit card payment for $311.47. Okay, where did that come from here when we look at what actually went on the business credit card? And if we were to go to the business credit card online and look at that account, we'd be able to see $311.47 was actually what was spent in January. So that is what we paid, and that is what came out of our bank account. And we're not listing all of those separate credit card transactions. We're just saying the total payment to the credit card company was that amount, and that is what got taken out of our bank account. So the cash flow might be helpful just for us to be able to really see, okay, from actually in the bank, right? Because we might have services that we've provided that we haven't gotten paid for yet. And so this is really just helping us ensure, do we still have enough actually in the bank as we're waiting for different income to come in or expenses to go out. So those are the kind of main reports, if you will, that no matter what kind of organization you have, you may want for your bookkeeping. I hope that this was helpful for you. This is the final slide for this presentation, and it does have information on how to get a hold of me. I'm happy to hear from you. You can go to my website at wholehumanfinancial.com, and you're welcome to fill out a contact form there, and I will reach out to you and help you answer more questions if you have more that way. So stay tuned, because I'm going to also do more videos here to talk more specifically about sole proprietorship, S Corp, and personal finances. Until then, I wish you well.